What's going on? What's going on? This is going to be the trade review for Friday. I had a lot of things that I was working on. So the trade review, actually, let me go ahead and say the date. The trade review for August the 21st, 2026. Now I wanted to get this out before, like I want to start getting this out on Friday night so that you guys can go through uh this daily review. Okay. Now I will be start doing a daily review, like I said, with this document so you guys can go over it so you can take this. If you're inside the Discord, you'll have access to the PDF and you can just print it off yourself or update it to your own personal preference. Okay. But the goal is to get these out on Fridays, and then I'm going to start doing a weekly review. Most likely will be here on YouTube as well. And then a monthly review that kind of like ties in all of these recaps. Okay. So really quick, want to go over, right, what we were looking for on Friday. Okay, so what we were actually looking for coming into the pre-market outlook for Friday, the 21st, 2026. Okay, so like I had said, we had a great week, coming into this point, right? So, um, I'm not looking for very much coming into a Friday, right? Looking for about two shots max to really to deliver our targets. Not really trying to expend very much capital. Okay, essentially is what I'm saying here. Okay, the overnight, right? So this is what we were looking for here. So earlier in the week, we finally delivered the 29,250s, and then we ended up delivering the higher time frame area I kept talking about, 29,189s, being the next level we were watching below. Okay, so um, I'll kind of go over a couple different things. I just want to make sure I'm like referencing price when I'm talking about these things. Okay. And so, something that we were talking about, like I said, on the 4 hour, if you guys kind of feast your eyes over here, okay, as we were looking at 29,250s. Okay. So I was basically looking left to get right. I was looking for 29,250s was this low here from the 6th of August, 2026. Okay. And then us filling into the higher time frame fair value gap. Okay. So this was Friday here, okay? And so what we were essentially seeing was the previous day low, which was going to be here, right, from Thursday, August 20th, 2026. That low actually pierced into the levels, right? So we actually delivered past the 250 level if you're looking here to the right, okay, on either screen. We delivered through that level, right, 250s, and then we ended up hitting down into the 189s, or we got very close, excuse me. We ended up making a low here at 29,202. So we essentially never came and filled the exact area that I wanted, which you guys can see here was the key level 29,189s. Okay, now we did hold inside that demand. We ended up finding a buy position, which I'm going to go over on Friday. But that's essentially what the bias was looking at. Is we are wanting to see if we could slip past essentially this demand candle, this discount zone here on the right, okay, on the H1. We were wanting to see if we could slip past there, hit that Thursday low. So previous day low was a key area for us coming into Friday, and then seeing if we could deliver my higher time frame levels. You can look left to get right here. If you guys are looking on the left screen now, I was looking for the fair value gap in between these two levels. Okay, so just that price inefficiency to be filled, shorts to cover right from earlier in the week, and price to possibly bounce. Okay, and so when you go back over, um, when you go back over to some of our upside targets for NQ, some of our upside targets were 29,680 up to 29,700. Now, why was that one of my targets? Okay, 29,680 to 29,700. Okay, using the levels you guys can see here, okay, where those prices are at. This was coming into the day here. If we were to see an up push out of this area, my higher time frame areas were draws on that previous day high liquidity, which were 29,000 like 690s here to up to the 29,700 level, where there was a nice double top liquidity um pocket of liquidity that we like to attack, just sitting there. Okay, and so that was our upside target if we did go bullish, or just delivering a new high on day based on where we were at that current moment. Okay, and I released this around 8 a.m. so we weren't expecting a candle of this magnitude to come out, right? And one candle in 1 hour and just fall 200 handles. That's not normal. It does happen, but I'm just saying we weren't expecting that when I was dropping the outlook. Okay. Now, that had specific targets like I just talked about there, the M pattern from Wednesday's high, et cetera, et cetera. Okay, now our bearish scenario, on the other hand, right, 29,550 down to 29,600. So we were talking about, so yeah, so if we go 29,550, 29,600 generally holds the supply, buyers cannot continue higher, then we'll continue to watch price roll back over. Yeah, so that was essentially what our plan was, is if we couldn't see, guys, if you guys can go back and look at this on your own time, or or stop the recording to see those prices. But if we weren't going to, because the overnight price had basically pushed up here, right? So we had 29,330s. And so overnight price had made really, really good price action, right? So you had higher high, higher low, and extension higher, okay? Now, I personally can see all this stuff without looking at anything. I put this on here to help other people and to show the certain different levels, okay? But I do like to have the sessions just to see what that overnight price is, to identify it, to identify the London, and then into the New York, okay? And so bias was, all we could see was this. So if we go into it and we were looking at a 4 hour, 1 hour, all we could see at one point was this, okay? Before equities open, okay? This is all we could see on the chart, okay? This is literally all we could see here on the H1. Now, 7 a.m. going into 8 a.m. close. Now, what I was identifying was that this candle here was a level of supply. And now think about it. The overnight player was up from like the 29,300 level. Price had made higher highs, higher lows, higher high. Now, me personally, okay, in the Discord, I talked about, I had got in positions in those areas, okay? So if you actually go and look, um, at the overnight, okay, I had talked about having buy positions coming into the equities open, okay. So let's see, where were we at here on that? Was that a little bit before? Yes, let's see here, okay. So this would have been, just want to make sure I'm doing the right days. Okay, cool. Okay, so this is 8:20. So guys, I literally was saying, can you see the target the day before? You can see this is 8:20, right? 10:03 p.m. So this would have been Thursday night coming into this equities open, okay? Now, as you can see here, right? If you need the NAS 100 data, I was talking about this. I bought this position for the overnight to go take out either this area here or to come into this supply zone here, okay? And so that was like my bias coming into the overnight. And you can see I was basically saying, could be a pretty good setup. Also, I was looking at oil prices, right? Crude had, pushed up to a point where they had trapped individuals, I think, in this price here, and then price failed to go break past the supply, ended up making a lower high in those 87.20s, 87.40s, and was showing weakness at the same time that we were getting the push up on the buy position on the 21st, okay, at 10:08 a.m. Okay, so this was also very helpful. But what am I trying to show here really quickly? So not these orders yet. Okay, so coming into the beginning, what we were wanting to see was, I personally was wanting to see, since it was so healthy overnight, I was anticipating that we could see a rollback over if we rejected that supply candle, okay? And so if I was going to buy a position, the only place I wanted to buy was at the low end of the demand, right, of the discount zone on the H1, or if we slipped the previous day low, okay? And so when you go into this, and now we'll dive into the 15.5 and like what we really were seeing, because I've really been focused mostly on this right side window, okay? The 4 hour does, I am looking at that from a certain perspective, but there's just quite a bit of lipstick, and that just means like chart stuff on here right now. But this, I want to go into just the 15.5 here really quickly, okay? So let me bring up that 15.5. Now, the other thing that I want to bring up, okay, is going to be this, okay? This is what we focus on every day when it comes to our daily reviews, right? What was our bias pre-market, right? What were some of our key levels? Did they respond or did they not? So like I'm just reading from here, okay? What are some key drivers? Was there a news release at 7:30? Are there any red folders on forexfactory.com, right? Like what could there be on those situations? And what are your setup expectations, right? Do you see a level, okay? Do you see a level, like I was saying here personally, pre-equities open, when I'm looking at just, let's go 15.5 here really quick. When I'm looking at that 15.5, do I see an area that I can identify as a potential area of confluence? And like I said, coming into this, right, before I show you guys the whole buy position, the RSV that we played, right? Now we can kind of condense down to, you know, pre-equities open on the 15. Now this looks like a roller coaster, guys. Think about it. Prices making higher highs. This is the open of Friday, right? Prices making higher highs and higher lows. Like I took buy positions down in here, close to the it was 2300 to be 11 p.m. So it was close to 10 p.m. I was taking buys off this candle, okay? And so now you get healthy price on the overnight. Let's just kind of take a look at line graph, right? Higher high, higher low, higher high, higher low, pushing up, right? So price is bullish in that overnight. And so what you're essentially thinking is that equities open is how did this individual, put yourself in their shoes, how does this individual over here, okay, that's in buy positions, how do they get out of the market, right? Most likely they have to press take profit, right? They have to manually press it, or they've got, you know, their trade their TPs already set, okay? And so as I'm seeing price, as you look left to get right here, okay, as I'm seeing price respond, and I want to show you guys on this side here as well, okay, on the 5 minute, as I'm seeing price respond here, like it's like, do you see the price here? And now when you look left to get right, okay, when I'm seeing this here, okay, all I'm doing is I'm putting a ray on the open of this last up candle, so the supply candle, this, you know, whatever you would like to call it, but I call them supply candles, okay, order block candles for ICT people. But this candle is just an area where orders are stuck, okay? And so when you draw a line to the future, okay, which will be over here, right, and right into the future, let me take the magnet tool off. I was like, why is it doing that? Right? You can see now, before equities open, this would be right here on the left. This would be on a 15-minute bar. This would be 8 to 8:15 right here, and then this was 8:15 going into 8:30. So lots of manipulation, okay? And so what you're seeing to me is a roller coaster. Went higher, high, higher, low. You finally got to the top, like the Texas Giant, and then click, click, and then turned over, okay? And so why do you see the sell-off back into the low of day and back into the demand zone that we look at on the H1, right? So I want to make sure I'm looking at that H1, right? Focus here on the right side here really quick. Why did we fall back into this candle, okay? This candle right here is what we're focused on, okay? And so what we're focused on seeing is edge. What we're focused on seeing is supply and demand. What we're focused on seeing is where orders just are, right? Buys and sells, okay? And so going back over to the small time frame, when I came into this bias, right, I wanted to see us sell back off, but I didn't see anything personally that was clean enough for me to personally play. Now, there actually was something that I did see on the sell side move. Now, if I missed the sell, I never get upset because I understand, especially if it's a very quick, a very fast move, right? Like Friday was, right? And also like Wednesday was, right? Then I know then I'm going to probably see a short covering situation. Just really quick to recap, I didn't put a recap up for Wednesday because it was such a beautiful play that I had to break it down into an example video. Okay, so just kind of recapping on Wednesday here very quickly, right? It was such a beautiful day, right? It's very similar to how today played out. Okay. Now the difference in how Friday played out and how Wednesday played out is we played the shorts down. Okay, on stream we sold down into London lows as a target. So I'll kind of break that down here very quickly because, like I said, you'll be on the lookout for the example video of sell to buy and how to do it, RSV model. But in this situation here, we sold down on Wednesday, but Friday, like I said, I didn't sell. I only caught the buy because I was just trying to be very selective. But in this situation here, we had the 825 going into 830 candle right here, and then this was the 830 candle going into 835. We ended up finding sell side moves. I'd have to go back and look at exactly the price on the chat, but I know it was close to the 700 level with about a 20 handle risk. And we were looking for about a 1 to 3R. And then for extensions, right, for 5R plus anything past 5R, we were looking for the draw, right, on the London lows, which were these lows right here. If you look left to get right, you can see that they were the lows here on the 15 as well, and on the 5 minute, right? So when you're looking at that 15, looking at line graph, that was that low. That was just our target where people we knew stops we were going to be building. Okay. Now, price did go and extend past our structural target and our multiple target. It went way past that zone. Okay. So let me look at the actual Discord for the that day too, because I just want to see exactly what day this was. The 20th, I believe. Okay. So Wednesday. I'm kind of briefly going over Wednesday's trade to kind of come into Friday's trade to show you how we could have actually capitalized on the same exact situation on the sell side that we did on Wednesday and the buy like we did on Wednesday, okay? But we only did the buy on Friday, but I'm just showing you guys the same thing, okay? Let's see here. Okay. Just give me 1 second here. Okay, so this is where it was, okay? So you can see here, let me go back over here really quickly. You can see here, this is 8/19/2026. So 8/19 is going to be Wednesday, right, of August 2026. And so the move that I was calling out, right, it was a sell to buy situation. I was feeling that if we could sell down, okay, like you see here, if we could sell down from 29,700s, okay, down to the London lows, which was 29,500, that most individuals would for sure, right, even from the zone, I'm going to go mark it up and like show it. Even from this zone here, okay, not even getting above New York Open, right? Like we were really wanting that 700 level, but I was calling the break on the 1 minute level, right? With the 5 minute fair value gap fill to the downside. It's just a really good continuation trade that usually has a pretty good amount of velocity to the downside, okay? And easy R multiple to take. So in this situation, like I said here, we were looking to sell down to here, 29,500 whole level, and then possibly delivering the low of day, which was 29,430. Now, if we could get all the way down to 29,430, I was expecting, right, anyone that sold above 29,700 or the position that we sold, okay, or any lower to want to probably take profit, which would cause short covering buy positions back to the upside, okay, at least back to fill expansions to the downside, right? That's just how algorithmic price works, right? And so looking at the price here, let's go plot this up just so you kind of have the mindset of how we ended up managing this trade, okay? 29,670, okay, was the entry. I don't use 666. That trailed risk would have, I don't even know why I used that number. I probably moved it to 65 eventually, but 670 is what we're going to plot. So let's go plot that, okay? 670 is what we're going to plot. Now, I was calling it out and looking at those 29,700s, but let's plot out what we have, okay? So 29,670 entry. Okay, 29,670 entry, and then redo this to fit the 1 to 3 model. Okay, now we're looking at a 15.5, and I also want to bring over the 1 minute of this. Okay, let me bring that over. Give me 1 second here. The 5 and the 1 minute. So I want to really break this down very quickly, to be honest. Not too in depth because I've already made like a full video on the sell to buy example here on how to do it. But I want it to kind of fit into Friday's bias, okay? And so this was our entry when you see it on a 1, okay? Now we're going back to 15.5. Okay, so entry 670s, okay? We started to see here, this was a 830 to 835, right? So the price just looked like this at one point. All you could see was this, okay? Very first opening candle proved us that sign of weakness, right? That break of structure, lower low on that 5 minute. And so what most people do is they FOMO into a move like this, okay? So they pummel into the move and they're playing at the lows and it comes back and fills the 5 minute fair value gap and creates the 1 minute play, okay? And so what we were looking for is this 5 minute to open next, right? 35 going into 40. And if we've seen the fair value gap not be able to get above the algorithmic level 680, we wanted to take that down to the downside for a 3R position. Really was targeting this wick low of 29,578. But really what we wanted, as you can see here, and look left sometimes as well, guys, even if you have to go pause and go back, we were looking for, okay, the liquidity that was resting under this 15 and 5 zone at the 29,500s, okay? And so when you go back and you look at this move, okay, this was a pretty good entry when you look at it from here, okay, and you enter and it was like it's a bang bang play, okay? So 1 to 3 risk reward on this, so we're risking 20 points, as you can see here, to gain 60. Easy type of move. These type of setups, guys, happen for us all the time, okay? Now, if you extend down to the TP target, which would be just getting below these lows here, you're looking at something more on the lines of a 1 to 8R, right? Which is insane, right? 8 times your risk, right? So if you're risking hypothetically, let's just say in this situation, $100, okay? You're getting 8 times your risk, you're making 800 at this draw on liquidity. That's really, really good, okay? And so beautiful move, okay? Now, Why am I showing this move? Because we took this where we should have taken the same type of move on Friday, okay? We ended up waiting for our TPs to deliver through the London lows. They ended up hitting that low of day, which would have been here, right? As you guys can see here, this is the low of day, 29,429. And then we ended up buying that position back based on the same criteria that we're going to look at that we did on Friday, okay? But just kind of showing you guys, we missed an opportunity to sell down to buy up again on Friday, but we did end up taking that on Wednesday, which was a beautiful play. Probably the best play of the week. Other than I think this buy was really, really insane on Friday. Okay. Now, going into the criteria here very quickly, okay, we like to take trades in the first 15 minutes of the hour, last 15 minutes of the hour, and we like to align our higher time frame context all the way down to our lower, and we like to have that understanding of buy orders of buys and sells. Okay. Now, something I said because I personally, like I said, this looks very similar to Wednesday, right? Sells off at the equities open, capitulates through the London low, and was going to attack some of this internal, overnight liquidity here on the left side here in the 29,320s back below the daily open, right? I know just the easy concept of trading is buy low, sell high. Okay, so you want to, if you're selling a position in the highs of the day, like 29.5, you want to be giving it back anywhere below daily, right? Because buy low, sell high. So how does this work, right? If I would have shorted the same position, kind of like yesterday, this was 8:30 going into 8:35, you would have to make a decision inside the location. When you go and you look at the 1 minute trade for today or for Friday, okay, and you look at this area and see the crown form, you definitely could have taken it. But for me, for some reason, the lows, when they made this first candle 820, 825, and then this was equities open, all you have was the very first candle just extends down and breaks. I was wanting to start to kind of, force a 1 minute setup, and I'll kind of show you guys where it's at. Now, when I'm taking a 1 minute setup like this, I want to make sure that I'm personally inside the 5 minute location zone. Okay, so I want to, like, when I'm looking left over here, when I take that sell in that 1 minute, depending on where it's at, I really want it to be as much as I can inside this candle, okay? So for example, when my eyes were actually seeing it all together, I was more seeing it when it was starting to break here, for example, okay? So if you look left to get right, like if you're looking on that 5 minute, I just said I want my order up in here, okay? I was hesitant to sell the position at 29,450 with this candle sitting here on the 1 minute like this after the force up, okay? I was wanting it to kind of, like I said, come down a little bit and then maybe fill an area and give me a chance to sell it some more to the downside. So I personally didn't call the sell because it didn't look as good as we took the one on Wednesday because of that situation right there. Now, if I would have been like this, and this was the very first minute of equities open. So I mean, like I only had from 8:30 to 8:31 was here. And if you sell it at this point here, like right on the open of that 8:32, or excuse me, 8:31 going to 8:32, to me, you're still inside of a 5 minute expansion. Now, let's go back and plot. Let's look at this position on a 15.5. Okay. Now, when you look at this on a 15.5, the other thing was if you get the 5 minute locations here on the right, 15s on the left. Now, as you guys can see, if I said I wanted that at least 450s inside that zone there, it didn't even really look the part on the 15, if that makes sense. Like you would have had to really, to me, force the move just based on how the 1 minute price looks and engineered and how I would have traded it. I would have possibly traded it right here with a 20 handle risk. But like I said, you would have had to take this trade. This is the very first minute of equities open. You would have had to probably push it really hard. Okay. And most people that get those, they'll guess, but I'm not saying that everyone guesses, but because people can see their pattern and their edge and they take it. But to me, that was forceful. Now, the trades that I look for, guys, are what I call layups, easy money trades, right? Trades that happen over and over and over again. Okay. First 15 minutes of the hour, last 15, 5 minute closes, same situational type of plays. Okay. So, what I was looking for here was, since I missed the short, okay, price was to roll off of a cliff. Now, the first area I personally looked for, right, was going to be after anywhere we started getting under daily open. So you can see here, this is the first 15-minute candle, 8:30 to 8:45. We capitulate down back below daily. Then the next candle, 8:45 going into 9, we start to test where, okay? If you look here on the right side, we start to test. Right at this point, we don't have anything to work with except this on the 5 minute, okay? Okay, we're testing down right here on this candle here, 8:45 going into 9. Now we're in the 9 to 9:15 candle, okay? Now on the 5 minute, we're over here, we're on the 9 to 9:05. Right now, we don't really have much to work with other than our higher time frame context and knowing that we wanted to see this fair value gap, okay? this fair value gap here be revisited. And if price could hold up in that area, then I wanted to see those shorts cover from New York, which shorts covering, which causes buy positions. Okay. And so this was going to be the first trade that I took one scratch and then one banger. Okay. Where I'm really focused on when I play these RSV positions is I want to focus my best of making sure I'm on the right side of the turn. Okay. A lot of us as traders, we take a lot of trades on the left side. We expend ourselves, our ammo, right? We take 1, 2, 3, trying to guess each low in this little part down. So what I've come to learn is certain nuances and certain things to identify things that help you save ammo, right? And be able to play R multiples back up to really, really good positions. Okay. And that's what the RSV model is. Higher time frame context down to lower. Okay. And so price here at 9 a.m. I want to show it on the 1 minute where I took my scratch, just so maybe you guys it can kind of help you in the next time you take a trade. We got everything I wanted to see here. We had lower low, lower high, lower low, and then right in the right time, which is 9:05 going into 9:10. If you guys are looking here on the left side here very quickly, 9:05 to 9:10, we failed to go lower. Okay, and we had delivered, as you guys can see here, the new low of day. So we had already, anyone that had long positions that had their buys, their stop losses sitting at the low of day, they ran them. Okay. After, okay, they ended up closing a sign of strength. Now, if you look at price, essentially though, it's still bearish. Okay. Lower low, lower high, still making lower low until that price was to go here. Okay. From here and break out and do something like that, it's still bearish. Okay. And so that was the one thing that I would say in this situation that was like, okay. But looking at the overall price for me personally, I wanted to see, like I said, if they could hold this area and then shorts were shorting at the low end of the range. So like basically price already fell off. I felt like most people are going to try to force themselves into the shorts. What I'm anticipating here is that most people come in here in this level like this. Okay, and I don't know what type of risk they would actually have. I'm just kind of going off what I like to do. But they'd be shorting at the low end, putting all their risk inside of this area here when most people had already gotten the position. Okay. And so I was anticipating a pop, right, back through this level since we took the low of day to go like this, right, to then get back into some of this area. Okay. It's very typical of price to do something like this. Okay. So took a trade. So let's go off this really quick. Took a trade when I seen that 5-minute close like this. Okay. I seen the 5-minute close and then I waited for prices to come back down to the 300 level. As you guys can see here, what I'm looking at is here, right here on the right. This was 9:12 going into 9:13. This was 9:13 going into 9:14. Okay. Where I took my first trade, my first loss, okay, was when price came down into that 1-minute demand. I was inside the 5-minute area that I wanted to be, right? And I could identify me personally, a 1 to 3 back up into some pretty good liquidity. Okay. Now, like I said, to take that position when I was taking it was here. You guys see here, I talk about this 5-minute candle being my reference point. This is my signal. And I was anticipating that this was my 1-minute mitigation play to take me back to the upside. Okay. So I played the position here, 20 handle risk, right? 60-point gain. Price ended up coming right after I took it here, 9:12, 9:13. Like whenever it was hitting right in this candle here, I think I was taking like I was taking it right off the open. So these 92, 93s. And then this next, so I took it right here. Next candle opens, 13 to 14. Bang, stopped me out. Bang, it goes lower. Okay, makes a new low. There's no problem. That's fine. Okay, that doesn't mean you just come in and start shorting the market. Okay, and a lot of people get trapped because they're like, oh, I want to be with the trend. I better just come in and short. It's like, no, don't do that. Okay, but then what ended up happening? Okay, after I lost one trade, okay, I stayed focused. I stayed in the right mindset. I stayed clear and I knew what I wanted. Okay, now if you look at the 9:15 to 9:20 candle. This is all you could have seen at one point. Okay, I'm gonna move this over here just for a second. But all you could have seen at one point was this candle going 9:15 to 9:20, closing bearish. Okay, so there's really nothing to work with still. Okay, like if you look at it from this perspective here, go forward one more candle, which is the candle I'm talking about. Right here, if anything, there's people probably playing fair value gap short to the downside. But guys, you gotta understand, the overnight player is up tremendously on shorts. We're below the new low of day, so we're actually, anyone shorting right here it's very risky, okay, because you're of the breakout area, okay. If anyone that wanted to be shorting, they should have been shorting above daily open and putting their risk at this low end of the day, okay. And so right here in this area, I'm still anticipating because we came into the top end of this FEG and I thought maybe we could come down below 29.2 and into my 189s. We should see some short covering from this type of zone. Okay, that's just pretty much what I identify over and over and over and over and over again. Okay, now there's a couple things that helped out with the 15 and 5 here on this move. Okay, you don't always have to see the 1 minute trade. Okay, what I seen here when I was looking was the 920, the 925 candle engulfed and showed me that sign of strength exactly where I wanted to see it. Now, I'll put the line back because when I seen that, first I want to go back to 15.5, okay? Now, when you look at that candle on the 15.5, 920 to 925, and then 925 right here to 930, then if you guys notice, if I go over one more candle on that right screen, then we're on to the next candle on 15. Bang. See what I'm saying? So that one little shift shifts you to the next candle. So think about this. When I got this signal, this was 920 to 925 that I just wanted to play back up to this high or back above, daily, was right here. Now, draw the line. Okay, I already have it out. See, I thought I had it already on here. Okay, you draw the line down the 5-minute candle that you're using as the reference point. Okay, so this is going to be the candle here, the one we're using, the one that engulfed. Okay, now when this candle closes, it's going to be 925 to 930, right? So that's when that 15-minute candle closes there on the left. Where we started to attack the trades was we had our signal, we waited for a 15-minute sign of strength, and we always wait for the second candle after our signal to take our entry, okay? And so it just so happened to be when we took this trade, originally this trade looked like this, okay? It was a 1 to 3 setup. Price came into, it was 940 going to 945, candle closed exactly in that area, and I had the bullseye. We failed to go lower than the fair value gap demand area, 29,250. 15-minute had closed strong, right? So indicating to me that shorts are ready to cover, okay? And 5-minute price was now starting to hold up, and it had already taken 1, 2, 3. So it had already taken a wave of people out, right? When it came down like this, okay? So it took people out first here and here. And so most people have lost most of their ammo before now that they can be ready to take this trade, okay? So we took one loss, like I showed you guys, 910 to 915. And then, like I said, seeing this candle here close 925 to 930. So all you could essentially see on a 5-minute was this at one point, right? And that's still pretty bearish to me. But then when this candle closes as a bullish candle, 15 going into 30, okay? It's like this very next candle close like this. When you're watching 15.5 1 minute at this point and you're seeing that we're not closing back below that low of day, it's almost as if the range is holding, right? And then we're going to push back at least 50% of the range or possibly back up to the opening price, okay? And so for me, that was all I really needed to see was that 15-minute candle close. And then I took my, my probability setup, right? 20 handle risk, 30-point gain, 20 handle risk, 60-point gain. And then I was really just looking to get above the most recent high on the 5-minute, which was here. Okay, and that R multiple for that based on the entry that we had was delivering at least a 1 to 5. So if you can get up to this area here, like anywhere above, okay, you're looking at least 5 times your risk for sure. Okay, so that was a beautiful move. Okay, it fit all the criteria. It looked really similar to Wednesday. We didn't take the short down, could have possibly, but it would have been a lot more forceful. The Wednesday short was way better. We did get a draw on liquidity. This is something that always happens, something that's very key in the RSV model, right? And finding market structure shifts and reversal setups. And so, yeah, waited for the 15-minute sign of strength. Second candle was the entry area, right? The way I teach it is basically the same. And then we were able to find that move up for over 5 times our risk. Now, if you look at the actual Discord, okay. Okay, we sold down like I talked about here. Obviously, we were having a little bit of fun, okay? And then price ends up, this was still the 20, right? 7:46 a.m. So this would have been Thursday. Where's Friday at? Okay, cool. So you guys see here, this was that first area I talked about. They came down, ended up attempting that one area here, and I had lost. And then price basically did exactly like I talked about, right? We had the 5-minute sign of strength, that 15, waited on this candle here to close, and then started to attack those 267s. I thought it was 270s, okay? 267s for 3R, 5R plus, just to get back above these highs. So then when price started to run, I was already up for the day. All I did was just really just protect myself. Okay. And price just continued to run. We were able to actually hold this trade for a lot longer. Okay. 267s, 5R times our risk on this setup, okay, was definitely delivered. And then I said, basically, if we can get back up into New York supply, 29,450s, or back above New York highs, that would be pretty interesting. This was really a reach, 29,550s. I ended up TPing my futures position somewhere around that New York Open, okay? And so we'll continue to go here and kind of see where that was at. Everything was looking really good, like I was talking about, right? From a 1 hour demand perspective, right? Understanding where shorts cover and what I talk about all the time, okay? Let's see here. And then, like I said, we were able to let that thing continue to keep running, right? So price was just running, right? And this was like almost a 10-hour trade, okay? So 267s, 367, 467, right? So right in that 467 range or getting back up to New York Open was going to be 10 times your risk, okay? So beautiful, beautiful trade. Now, the other thing I talk about here in the live trading chat, okay, is following QQQ and understanding the demand supply situation here, okay? They did the very same thing. They sold off on QQQs back into the demand 710s. Individuals started to cover that position, and we've seen a top tick of the New York area. Okay, that was beautiful. Okay, so that was very helpful as well in our position. Okay, so let me go back to here. So cool. We went over the higher time frame buys, talked a little bit about Wednesday and how we found the sells to buys on Wednesday, and these looked very similar, right? Could have probably found a sell position inside of here. Felt like it was more difficult. Felt like the layup play was either we slip previous day low or we hold range and take timing setup back up. As you guys seen in those screenshots, we were able to deliver right back above the New York shorts high, which was ended up being my take profit on my position on futures, which ended up netting us, let's see, a little bit over, like I said, over 10 times your risk, okay, if you manage it correctly. If you have to position down, okay, from wherever you started, then that would have been obviously still a 5R trade, which, you know, 1 or 2 of those a week is really great, okay? And so showed a little bit about QQQ and kind of how that helped out. Now, I'll be doing a pre-market call a little bit closer to 9 tonight here Sunday night. This is the recap for Friday, but I will be doing a little bit of a pre-market, what I expect on weekly, monthly, daily as we come into the end of August here, okay? But beautiful RSV model, like I said, stayed inside the range, fit the criteria pretty well. The only thing I'd say about this one was we've been noticing in our data that 9:15 going into 9:30, the reversal pattern likes to happen, or individuals like to present our setups. So outside that first 15 minutes, yes, but we have found, you know, more than 5 to 6 setups right in this type of range where the pattern does present itself and give us a favorable R multiple back up to targets. Okay. And so I hope I didn't rant too much. I'm also going to be going over, guys, crypto, right? Weekly, daily, monthly, some ideas, understandings of stuff that, you know, I've been following for a while now. And then also we'll talk more about dollar index and how that really affected what we were seeing and what we were anticipating. You know, seeing more downside on dollar was, you know, putting me in a position to want to see the buy positions either from, like I said, demand or from slips of the area. Okay, let me move this blue line. Okay, now we let's see here. So yeah, so cool. So guys, if you haven't had a chance, inside the description of the video there is links for the Discord, right? For the free community and for the live trading room. Just so you do have an idea, I will be working and still am working on right now, you know, putting out what's called the RSV Blueprint course. It's going to be more for traders who, you know, just need that edge, stuff that I'm going over here, exactly the criteria, why we focus on certain levels, et cetera, et cetera. And then I will be putting out a beginner's course, right? Just more basic trading for futures in general, for YM, ES, or NQ, or the micros as well. And also it'll apply with indices, okay? So if you have any questions, definitely DM me about this type of setup. If you guys took a setup similar to this or somewhere in this area, or maybe you took the shorts down, you know, definitely just shoot me a message. And I appreciate you guys watching this, and then I will see you guys on the next one.